Hi everyone, Stats Trader is here. In this video, I'm going to show you how to take all your Excel data that you've tracked for one specific pattern, how to basically visualize it, how to build histograms so that you can visualize your data. When you track a strategy and you track your averages, actually these averages can be very misleading. The problem with all these averages, after you have this specific average for a stock, let's say a drop percentage for a stock, how do you know what's the likelihood of this stock to go down 30%, 40%? And out of a sample size, let's say you have a sample size of 100, what's the breakdown? How many times a stock drops 20% and how often it drops 60%? And if you just look at your average number, it can be very misleading, and it will definitely hurt your sizing for this particular pattern. So this is the trick, the Excel trick that I use to grab these data, and so that when I'm actually trading this pattern, I have not just the average, I have the visual graphic before me, so I know how often a stock drops or goes up to this particular percentage range. And again, on this YouTube channel, I basically break down just one strategy. I do a large cap dip buy. I actually trade 7 different strategies, and mostly I trade other strategies. I focus more on these other strategies in my private classes, and also in my private classes we go more in depth into the data analysis and graphs. So here on this channel you basically get like a tiny fraction of what I do to trade stocks. By using these tools, you can definitely improve your trading. So yeah, let's not talk much. Jump to my computer and I'm gonna show you what it's all about. So as usual, on this YouTube channel, just a reminder, I only go through just one strategy, the dip buy strategy. You can watch my previous videos. I'm trading this strategy. If you don't know what it's all about, just go ahead and watch my previous videos. So first of all, I go to this this tab where I'm tracking large cap dip buy strategy. And first of all, why do I have this all blacked out? I get asked literally all the time. Every time I post a video, there's someone in my email asking me to share my spreadsheets, or asking me all kinds of questions, and I don't really share that information, or I don't really share any spreadsheets ever. Why? Because there's always this one person who says like, oh, you know what, like I have a friend who's a programmer, let's create a robot that would trade automatically. And you guys need to realize, like, you all have like full-time jobs, like 9 to 5, whatever. I don't have that. Like, this is my only and my biggest source of income. So if there's someone out there who creates a robot who trades these strategies with these averages and doing the same analysis, that's it. Like, it's gonna ruin everything for me and for everyone else who's trading these strategies. That's why I never share these spreadsheets with anyone, because the edge that I found with these Excel tracking and with these tricks is really like unfair to everyone else, basically. And on this YouTube channel, I go like really on the surface, like what I'm doing. In my private classes, I go a lot deeper, and I go through a lot more stuff more thoroughly. So yeah, just a remark. So let's see what we're gonna look at here. So as you remember, for this strategy we'll look at the averages, date, ticker, open price, closing price, parabolic decline low, that's the lowest price where a stock went, and then how high it bounced from the lowest point, so that's parabolic decline high. And then I need the percentages, so I need the parabolic decline percentage and parabolic bounce percentage. So parabolic decline is basically, if you remember, let's do this real quick. So let's say a stock goes from 10 to 5, so that's a 50% loss on the stock, so negative 50%. or decline, you know, whatever. And then, so this is my parabolic decline. So here, this is the parabolic decline percentage. I want to know from open how far below the open price stock went. Then from here it bounces. So this is your parabolic decline bounce. So right here, parabolic bounce is, and then you have this average here, which I gladly share with you guys. So this is this distance from here to here is the parabolic bounce percentage, and then gain on the day. Gain on the day is basically how a stock closed. So if stock closed here, then I want to measure the distance from open price, which is here, to close price, right here. So these are the main things that I focus on this strategy. Just a little recap for you guys. Now, so generally, how I would trade like 2 years ago when I was just starting my trading career, I would look at the averages and I would say, oh, you know, like on average it only drops 38%. So when it drops to 30% or 25%, I'm gonna buy, and then I'll wait for 20% bounce. And then it did work out for me pretty well for a few months, but then I realized that I'm missing out on a lot of profits, and that's how like I basically developed my own way of sizing in, which like I talk a lot about it in my private class for this strategy and other strategies that I'm trading. Now you need to realize that this strategy here, large cap dip buy, is only a tip of an iceberg. So it's literally like 5% of what I do. So this is just side note. So now again, after we have all these averages, I need to know how often this happens. So what's the likelihood of, when this particular pattern happens, what's the likelihood of a stock going 30% down or 40% or 50% down? And this gives me like just an unreal edge over everyone else, because I know like, yeah, it might go 30%, but in some cases it will go 50%, and then, but how often it can go that low? And that's exactly what we're gonna build here. So I'm gonna step away. Actually, yeah, let's do this. I'm just gonna let's use this yellow field here. So what am I gonna do here? First of all, I'm gonna go to the left part. Gonna go back here again. What am I gonna do? First, I want to see how far all these stocks can drop. So each of these cells represents the percentage, decline percentage from the open head. Go to the left, and I'm gonna grab all of these decline percentages, right? So I'm gonna go all the way down, and then I'm gonna go back up, and I'm gonna press Control and do the same thing with the dates. So I'm gonna drag it all the way to the same level where I was getting these average percentages. And then I'm gonna go up, and I'm gonna click Insert, and I need a histogram. And I click on histogram, and this is what I really care about, and I wanna click it on this thing, and this is exactly what we're gonna analyze right now. So these are all decline percentages. Oops. Decline percentages for large cap did buy. So something like that. So what can we see here? We see that 50 or 51 times out of all these data. So most often a stock goes down from 28 to 35%. So from its open price, at, let's say 10, a stock goes to 5, you know, that's 50%. But most of the time, according to our histogram, it only goes from it goes down 28 to 35%. So this drop is actually not 50%, but usually it drops anywhere from negative 28% to 35%, right? And that's the most frequent, that's what happens most of the time. Now, and also look to the right and to the left. So basically what we can say from all of these data, so most of the time a stock drops from 22% to 41%. So on average, we know that we can do this. So we just basically type these outliers. So we're gonna put negative 22%, right, to negative 47%. This is gonna be just like most of our data, like 80% of our data or something like that. So 80% of times when you're trading this pattern, you must wait for a decline from negative 22% to negative 47%. So that's the idea, what we just got from here. Now we can actually go much deeper. So now we know the average decline percentage and how often this happens, right? But just by observing these bars right here, that's the most important thing. Now let me do this. I'm gonna drag it to the side, and we're gonna do another thing here. So we do this, we grab the gain on the day percentage, and what are we gonna do? We're gonna graph it. And the same thing, we go to insert, and here we go. So that's, you have your gain on the day or close percentage. Now, how are we gonna use it? Gonna drag it up, see if it works. Because I want to compare it to this chart right there. Yeah. And let's move to the side and let's bigify it. Is it big enough? No. So now stretch it more. Now we just basically need to compare these two charts and see what can we find. So we see that, so this is the decline percentage or low percentage on the day, and then this is the close percentage. So we see that most of the time it declines anywhere from negative 22% from open all the way to 47%, negative 47%. That's the most of our data. But how it actually closes, so most of the data, according to the data that I've tracked over the course of the last 3 or 4 years, something like that, you see that they close negative 28% to negative 19%. So what does that exactly tell us? So it tells us that there is some kind of a bounce. So they drop 28%, and then they close negative 28%. That's so basically there's no edge. If you want to buy it at negative 20%, there's literally no edge, because you see it drops 28%, like here, that's what it did, to 35, and then it closes exactly in the same level, right? But then let's say if something like this happens, and let's say it drops let's see, 35, 41, let's see if it drops like 47% or something. If it drops 47%, you know, then if it closes at most of the time 28% or 19%, that's the most of our data, or 28% to 37% and negative, it means that there's 15 to 20% bounce. So basically what this data means is that, okay, so it dropped, average drop, let's say 26%, right? But let's say it drops 47%. And we know from our data, it still happens often, but let's say 47 to 53. That doesn't happen very often. But then we know that if it drops, let's say 53%, right, it still has really big chance to close at negative 19%, because this is where most of our data was tracked. So let's say it dropped 47%, negative 47, or let's make it like negative 50, right? Negative 50%. But we know that our average and our frequency data tells us that it's gonna close at negative 19%, which means that there's gonna be this huge bounce. And so the bigger this number is, the lower it drops, the higher this bounce percentage is gonna be. And just by looking at these two data, you can kind of judge like where do you want to trade. Like, do I want to buy it at negative 28%, because or do I want to buy it at 22%? No, I don't want to buy it at 22%, because on average, you see, most of the data, it closes at negative 28% to negative 37%. So no way in hell I'm buying at 22%. So if a stock drops 22%, right, I'm not gonna buy it at 22%. That's a lottery, and I don't gamble, you know. I'm gonna wait for a bigger drop, 50, 60, 70%. And so yeah, that's basically the way you use these data. And you can go even more. You can see, so now we looked at the parabolic decline percentage. Now we're gonna look at the parabolic bounce percentage, which will tell us precisely the distance from the lowest point here to its bounce percentage, which is you know, what we really care about, because this is our profit percentage, right? And if we compare it to, let's say, decline percentage, and then we build a bounce percentage right next to it, we're gonna see that, okay, on average it declines 35%, but then it bounces around 40%. You see, so let's go ahead and do this, and let's see what we can come up with. And I haven't built it for this particular pattern. I have it all built for all of my other patterns that I'm trading, but I'm kind of doing it with you guys online with all of my data. So I'm gonna go to insert, and here we go. Now the same thing. It's really hard to do it on the small screen, because for me to keep the video in the 4K quality, I have to basically, you know, use only like 1/5 of my monitor, because I have a very big 4K monitor, but I can't record everything, because first of all, the quality is going to suffer, and secondly, the size to upload is going to be insane. So I have to deal with this little cubicle to record. Okay, so let's, for the time being, let's just drop this one down. We don't need it for now. But this is our bounce percentage, and let's see what can we find with the bounce percentage. So we see that on average it bounces 13 to 26% from the bottom. I would say from 13 to 39%. Okay, so it drops 35% and 41%, and basically, so what do we see? That most of the time, if your drop is on the lower spectrum, let's say it only dropped 22%, guess what? You know, your bounce is only going to be 13%. So let's do it again. Follow the thought. I'll try to speak slowly or something, I don't know. Okay, so if a stock was $10 and it drops to 8, it's 20% drop, right? And then I see that it drops 22%, right? Decline percentage. And then a little bit of data, so like it only bounces 13%. And usually, I mean, if you run the regression, and that's kind of like way off the topic, you can actually run regression. For those of you who are statistics or finance majors, we did that a lot in university, where we run regressions between two variables and see how they correlate. And there's a direct correlation between how low a stock can go on a decline, right? And how much can it basically bounce. Maybe I'll do a video about regression and how to build regressions in Excel with the R square, but it's like a totally different topic, and another video that will take another 40 minutes or something. So I'm not gonna do it here. But we see that a decline of 22 to 28%, the bounce is not so big. It's only like 13% or 13 to 26%. But if it drops 41 to 47%, for example, right? So the higher, remember that higher declines, they correlate with the higher bounces. We see that there's huge chunk of data that your bounce is going to be from 26 to 39%. So the rule of thumb is very simple, if so under normal conditions, and that's the most data that I've tracked, basically 1% gain, or like let's say 1% drop is gonna equal to 1% bounce. So that's how it's gonna be. So if you see something dropping 35%, it's gonna bounce pretty much 35%, most likely. Okay, but there's also this thing where if it drops like 59%, 60, 70, 80%, this is where you have the biggest bounces, like 70% plus. And you can also compare it to this data and kind of combine it, and you can see it, like what I'm saying makes sense. So yeah, so this is how you build these histograms. They're extremely powerful. They're gonna basically visually tell you your likelihood of a stock going against you, and it's very, very useful, especially if you combine it with like different market caps and different floats, all that stuff. It really tells you the edge. And for example, for me, like October was just not a very good month, and there's a new method that I came up with to trade microfloat stocks, which is very, very complex for different patterns. But using these histograms, I was able to find the real statistical edge, specifically for microfloats. And now, my win rate with microfloats like 97%. I basically, every time I trade microfloat, I win. And that's thanking these histograms that I came up with to visualize and see the data. So yeah, it's very powerful. Excel is powerful, statistics is powerful, histograms are powerful, and you're powerful too. So yeah, let me know if you have any questions. And again, I'm not gonna share the Excels for obvious reasons. And we go very deep in detail with like different strategies with this kind of analysis, and this is really just the tip of an iceberg. So if you guys want to know more, you can reach out to me through my email, and we can set up a private lesson. And yeah, see you guys next time.